We normally start at 2 on the dot, but since we are also excited, I think we can start earlier. Good afternoon, everybody. And welcome to this press conference. The Monetary Policy Committee, MPC, of the Central Bank of Nigeria, CBN, held its 298th meeting on the 25th and 26th of November 2024 to review recent economic and financial developments, as well as assess the risks to the outlook. All 12 members of the committee were in attendance. Decisions of the MPC. The committee was unanimous in its decision to further tighten policy and thus decided as follows. 1, raise the MPR by 25 basis points to 27.50% from 27.25%. 2, retain the asymmetric corridor around the MPR at plus 500 to minus 100 basis points. 3, retain the cash reserve ratio of deposit money banks at 50% and merchant banks at 16%. 4, retain the liquidity ratio at 30%. Considerations. The meeting was held on the backdrop of renewed inflationary pressures as the headline food and core measures rose year on year in October 2024. The committee was particularly concerned that all 3 measures also inched up on a month-on-month basis, suggesting the persistence of price pressures with attendant adverse impact on income and welfare of citizens. Members, therefore, agreed unanimously to remain focused in addressing price developments. While food prices remain a key contributor to the uptick, members commended the efforts of the federal government for the improved security, especially in the northeast of the country, which would likely improve food production. The committee also noted the role of rising energy prices on the general price level due to its impact on factors of production. The recent increase in the price of premium motor spirit, PMS, has also impacted the cost of production and distribution of food items and manufactured goods. The committee was optimistic that the full deregulation of the downstream subsector of the petroleum industry would eliminate scarcity and stabilize price levels in the short to medium term. Members thus reiterated the need to strongly forge ahead with the deepening collaboration between the monetary and fiscal authorities to ensure the achievement of our synchronized objectives of price stability and sustainable growth. The committee noted the improvement in the external sector, reflected by the increase in the current account surplus, enhanced remittance and capital inflows, which have impacted the external reserves positively. This, therefore, suggests that key policy measures by both the monetary and fiscal authorities are yielding the desired outcomes. Members, however, expressed concern over persisting exchange rate pressure, reflecting continued high demand in the markets. Consequently, the committee urged the bank to explore measures to boost market liquidity. Members noted with satisfaction the continued resilience and stability of the banking system, despite significant exogenous and endogenous headwinds. Key financial soundness indicators, such as the Capital Adequacy Ratio, CAR, Non-Performing Loan Ratio, NPL, Liquidity Ratio, LR, amongst others, remain strong. The MPC, however, called on the bank to maintain its close surveillance on the banking system to sustain compliance with regulatory threshold and continued health of the industry. The MPC acknowledged the efforts of the bank in deepening financial inclusion towards improving the transmission mechanism of monetary policy to enhance policy effectiveness. From the foregoing, members thus focused on the optimum policy choice to address the uptrend in price development, stabilize the exchange rate, and anchor inflation expectations appropriately. Key developments in the domestic and global economies. Data from the National Bureau of Statistics showed that headline inflation year on year rose to 33.88% in October 2024 from 32.70% in September 2024. On a month-on-month basis, it also rose to 2.64% in October 2024 from 2.52% in the previous month, with both the food and core components contributing to the continued rise in headline inflation. Food inflation rose further to 39.16% in October 2024 from 37.77% in September, while core inflation also rose to 28.37% in October 2024 from 27.43% in September. The MPC, however, noted the moderation in the prices of farm produce, and commended the efforts of the federal government in driving increased productivity in the agricultural sector. The recovery of output growth was sustained, with real GDP year-on-year growing by 3.46% in the third quarter of 2024, compared with 3.19 and 2.54% in the preceding and corresponding periods, respectively. The growth was driven by both the oil and non-oil sectors, with a notable contribution from the services sector. The non-oil sector grew by 3.37% in the third quarter, compared with 2.80% in the second quarter, while the oil sector grew by 5.17% year-on-year, compared with 10.15% in the preceding quarter. The external reserves rose marginally to 40.88 billion as of 21st November 2024, from 40.06 billion at end of October 2024, available to finance 17 months of imports. At the global level, the IMF projects growth at 3.2% for 2024 and 2025 from 3.3% in 2023. Risks to this outlook, however, include ongoing geopolitical tensions, such as the lingering war between Russia and Ukraine, as well as the crisis in the Middle East. The deceleration in global inflation is expected to continue into 2025 and move towards the long-run objectives of key central banks in the advanced economies, albeit at a slow pace. This, however, faces a growing risk of reversal as talks of trade tariffs heighten following the outcome of the November 2024 United States elections. In view of the above developments and identified risks, members reiterated their commitment to price stability as the bedrock of a thriving Nigerian economy. The next meeting of the committee is scheduled to hold on the 25th and 26th of January 2025. Thank you.
Thank you very much, Mr. Governor, sir. That was communique number 155, presented by the chairman of the MPC and the governor of the Central Bank of Nigeria, Mr. Olayemi Kadusu. We'll now take questions from members of the press. Please state your name, your medium, and ask your question. Do not ask more than one question, please. Thank you.
Very good afternoon. Very good afternoon, everyone. Well, my question is, with inflation at the name is Musa Walker. I'm with MTA. My question is, with inflation at 33.88% in October, up by 1.18%, what steps will the CBN take to meet its 21% target for 2024? Thank you.
Thank you. Thank you very much, Musa. Let me first say that The central bank is resolute and committed to continuing to fight the war against inflation. There's no going back on that. And as I have said at previous fora, we are going to deploy everything in our arsenal to ensure that we are able to tame it. And of course, this entails the return to orthodox monetary policies, the return to orthodox monetary policies. So I think it is important to state that upfront. There's no going back on that. Now, it's also important for people to understand that there's a time lag between when you implement policies and when they have impact. And that time lag, quite frankly, can be, anything up from 6 months to 9 months to a year. It all depends on what you're doing. Our own perspective is that we expect to see greater results in the first quarter of 2025. And you can do the math from the time we started tightening. So we expect to see this in the first quarter of 2025. In addition to that, we are working very assiduously with some of the relevant agencies to ensure that those structural impediments are handled appropriately. And as obviously some of these things themselves take time, supply disruptions and infrastructure issues, which we all know, and a whole host of different things. And ours is to collaborate, to advise, and to help such that at least we begin to make that transition to a point where these issues are adequately dealt with. On our own also, we are doing what we can within the limits of our market, and in particular the foreign exchange market. And by that, I refer to the fact that we appreciate that many times some distortionary elements come into a market, and that is why we as regulators, that's what we are there for. So we are ensuring that we're on top of the game and that the foreign exchange market operates at its most optimal manner, and so it will reflect the true value of the currency, and of course you have price discovery. Then finally, something else I think is important to say, and that is that if you, and for many of you, many of the press, many of the members of the press who were at the World Bank IMF meetings recently, you see those fora also offer an opportunity to interact and to exchange different parts of the world. And really and truly, if they think those people that attend should get out of that, it is that. Talk to people in other parts of the world, see how they themselves have dealt with some of the challenges that we are facing. And you find out that we are not alone. We are not at all alone, and that the road of travel is similar. These things take time. You've got to stay the course and you reap the benefits. And for those who, again, have made it their duty to monitor how different economies handle these kinds of problems, if you talk to them when you visit these kinds of events, you can see that the expectation is that Nigeria definitely is on the right path and will continue to be as far as inflation and foreign exchange management is concerned. So I think the bottom line of all this is that these are all time-bound issues, And we do expect that in the fullness of time, we will begin to see the reaping, the greater reaping of some of the benefits of the great tightening and the sacrifices that everybody in the country has made.
My name is Mark Tibor from Leadership Students. So there are reports already that the foreign exchange, the foreign reserve has risen, for instance, like you said, to $40.88 billion. That's a good achievement. And then the foreign remittances over $600 million. But I want to know what would be your reaction or your response to those who are concerned that despite this rise in foreign reserve and the foreign remittances, that the naira exchange against the foreign other currencies, especially the dollar and the pound sterling, is still very weak. What would be your response to that?
Thank you very much. Yes. Okay, first and foremost, maybe I should unpack that question a little bit. Diaspora remittances, absolutely, and I would say that they didn't just go up on their own. They went up as a result of a deliberate policy on behalf of the central bank, and I've said this in previous fora, to address all the bottlenecks that were in the way of diaspora remittances coming into the country. So that has happened and will continue to. Then, of course, the whole issue of reserves, that yes, indeed, the reserves have gone up. The reserves have gone up. And again, we should bear in mind that the process of getting us to where we are with reserves has been a long, tedious one. And those of you who can recall, when this particular administration started, we had a lot of problem with reserves. We had relatively lower reserves, early 30s, and we had a huge backlog. And happily, all those things are behind us now. They are behind us. And I think that is a clear indication of the fact that the policies that have been used have begun to bear fruit. They have begun to bear fruit. I mean, we can talk and talk and talk as much as we like. If the numbers do not play out in line with what we are saying, then really you're free to say it hasn't worked and you're a failure. But that is certainly not the case here. However, and it's very important to make a distinction here and to reiterate the fact that reserves are there for a multiplicity of different purposes, okay, not least of which is to create buffers in the event of unanticipated shocks. So they are not there to simply whittle away. They are there to, be used to more or less defend yourself where that becomes necessary. And when we talk about shocks that are not anticipated, I think we can see how the global economies are going this day. And that's why we spend time talking about this anytime we have an event like this, that there are so many uncertainties that you never really know where things can hit you. And a classic case in point, quite frankly, is COVID. Nobody anticipated that COVID would come the way it did, and the effects of that everybody saw. Then I also want to make the distinction between the value of a currency, and the stability of a currency. I think they are two separate things. They are closely interrelated, but they are two separate things. Okay, for us, we always talk about the stability of our currency and stability of prices. And we will never tire of talking about it, because that is the reason for having the Central Bank of Nigeria. The Central Bank of Nigeria is there to provide stability. Stability helps you to plan. We do all we can with all the tools available, and there are multiple tools, including ensuring that people who are trying to game the system stay away from it, and sanctioning those with bad behavior, a whole host of different things, okay, to ensure their stability. Now, if you look and measure stability between June and now, you find out it has been stable. It has been stable. The currency has been stable. Now we go to the value of a currency, okay? And again, this is something I've made reference to in various fora. And that, quite frankly, isn't determined by any one entity. Less the central bank, by the way, because ours is to determine, to manage volatility and to manage how the currency pans out and to keep stability and price stability. But you cannot get away from the fundamentals of an economy in determining the strength of a currency. You cannot. You can wish it away, and it's not going to go anywhere. At the end of the day, all the various indices that go towards determining the strength of your currency, demand and supply, balance of payments, and I must hesitate here and say that if you listen to my communique, very positive balance of payments uptick in the recent quarters, very positive. And that's a sign of good things to come if it continues at that level. But those are the things really and truly that at the end of the day determine the value of your currency. Fiscal deficits and things around that nature. And of course, something that we should never take for granted, our own appetite for foreign goods. And I think this is an excellent opportunity for us as Nigerians, okay, to look at our economy and to say, let us have more interest in buying local goods and shunning importation. And none of this is too small towards helping to shore up the value of the currency, which is something that I know everybody wishes for. And by the way, as we continue to diversify our economy and we continue to have import substitution policies and trade policies that encourage our own products, then the issue of relying on foreign goods becomes less of an issue. And therefore, the level of your foreign exchange rates becomes less important to you. That hopefully is something that will happen over a period of time.
Governor, my name is Vanguard.
Vanguard?
Yes, sir.
Okay.
At your meeting at the last World Bank and IMF meetings in Washington, you had side meetings with Nigerians in diaspora and scientists towards boosting remittances. We want to know that up till now, Nigeria is still on the gray list of the Financial Action Task Force. And we want to know what efforts you are making to pull Nigeria off this list, because it is very key to capital commitment. Thank you.
Sure. Thank you very much. Good question. And let me again start off by talking about the issue of the trip we made to Washington and our engagement with the diasporans. And let me first of all say that I don't think there's anybody in this room that needs any convincing as to how well our diasporans in the United States, in Europe, have done. They've all done very, very well. They've all done very, very well. And that is not that I'm encouraging you to japa and go and And we took this opportunity of our visit to engage with them. And don't forget that 6 months earlier, we had actually gone one step in that direction by engaging with the IMTOs at the time. We engaged with the IMTOs. And because obviously they are an agent between the diasporans and us. So we engaged with the IMTOs. And that engagement was what made us come back and restructure and make it easier for our account setup for the IMTOs to engage and begin to have their transactions coming through on a regular basis. And that has worked in the sense that, again, like we said, we had moved from about 250 when we started to about 600 million US. So that, again, is a clear sign of an accomplishment there. Something big had happened there. So going this last time, we decided to go to two places. One is Houston, Texas, where there are a lot of Nigerian diasporans resident there, again, doing well for themselves. And then Washington, D.C., similar thing. And what was the reason for doing this? The reason was to listen, to understand what the problems were, if any, and obviously they were, and to encourage them to see and understand the changes that had been taking place in their home country and see how we could encourage them to begin to use the formal channels of sending money home, which they all do anyway. And in that respect, we went with some of the bank MDs and we went also with NIBS. So it was a partnership. We all went together and we had very, very fruitful deliberations with diasporans, listened to their problems, and came to certain conclusions, one of which, of course, was the frustration that many of them have had over the years, which we all know about anyway, in remitting money back and opening accounts in Nigeria. And as a result of that, we announced a non-residence account program, okay, which is going to kick off in December, okay, this year, and will make their opening accounts and doing their business in Nigeria relatively seamless. It's a huge challenge. Why is it a huge challenge? Because for those of them who are out there, of course, they have very huge expectations in terms of how they would like to do their business and do their transactions. So it's a big challenge. And happily, as I said, NIBS was with us. The managing director of NIBS was with us. And we made this commitment that in December of this year, they will start using that particular product. Of course, with that goes a whole host of other products that the banks can build around, okay? Because for us, it was merely being a facilitator and as a regulator to ensure that everybody plays by the rules and that it benefits all who are interested. So that is really where ours ends. Issue of FATF, very good question, because these two things go hand in hand. If we're on the gray list with FATF and we remain on the gray list, those kinds of transactions become more suspicious to those who are enabling them and the regulators out there. And we do not want that. We do not want that. We do not want anything that will send negative signals across the waves. And it is for that reason that we ourselves have better organized the whole process of getting off FATF. We're on the gray list. We are collaborating more we are ensuring that our AML processes and procedures work effectively, and that where sanctions need to be applied, they are applied, and we will not stop to do that. We are also enhancing our regulatory frameworks and ensuring that we're going around to see that the relative players are operating the way they are meant to be. And of course, we are deepening international cooperation, which is very important, to ensure that we are out there understanding what the expectations are from FATF and the ancillary bodies, and making sure that we are well endowed to meet their expectations. With that all in view, our expectation, quite frankly, is that by the second quarter of 2025, we should exit FATF grey list.
Thank you, Chairman. I'm from Radio Nigeria. Sir, in your briefing to us in the last MPC meeting, you said that the CBN was taking steps to check the reported cases of shortage of cash in parts of the country. So we'd like to know the update, because the report is coming higher, more particularly so that we are entering the period of Yuletide, and there is always a surge in the demand for cash at this period. So what's the reason?
Thank you very much. Very good question. And let me again reiterate that there are two ad hoc committees within the central bank that I personally chair. One of them is with respect to remittances, which we spoke about earlier, and the diaspora remittances, and the other is with respect to cash shortages. And honestly, I feel that I'm happy in some respects that we are seeing progress with the diaspora remittances. I'm happy we are seeing that, because you see, one approach could have been just to sit down and say, well, if it works out, it works out. If it doesn't, it doesn't. But one has to roll up his sleeves and ensure that you fight the battle and win it. And that will not stop. And it is the same approach that we are having to cash shortages. There's a lot that is going on, It's not a single area, it's multifaceted. But with respect to cash specifically, we're ensuring that all the deposit money banks are getting all the cash that they require. We're ensuring that is happening. We're having regular dialogue between the central bank branches and the cash money center banks all over the place to ensure that that also is happening, okay, and that there are no gaps. We are also doing spot checks, and a lot is coming out of those spot checks, and we are not relenting in applying the sanctions where we have to do so. And I think some of that has actually been announced in the recent past. And of course, the cash buffers going into the Yuletide season. I believe that you should expect that there may be some ad hoc measures that will come during this Christmas season. So I would just say you should watch that space. It will happen. We are concerned. We do not want people to suffer unduly because of a number of distortions. I can't talk about all of them here now, but a number of distortions which we are working very hard to ensure we get on top of. Yes, and you've rightly pointed out that we're going into a typically high demand season. We will do what we can to ensure that certain initiatives are taken to bridge that tide until after the yellow tide season.
Afternoon, Mr. Governor. My name is
Sorry,
Ndoka James,
27,
Nation
28
newspaper.
is the MPC meeting next one.
Sorry.
My name is Ndoka James of the Nation newspaper.
Yeah.
Last week, a few weeks ago, you were in Lagos where you hosted stakeholders on financial inclusion. The target now is to make 95% financial inclusion in the country. What was the takeaway from this meeting? Thank you.
Well, first of all, let me just say a few things about financial inclusion before I go into the specifics. Financial inclusion is beyond just devising products for those who are financially excluded. Find those who are financially excluded and give it to them. Okay, it's part of it, but it's beyond that. It's part of it, but they are beyond that. Sense that those who are financially excluded, and if you look at recent data from EFINA, you'll find out that roughly 30% of adult population are financially excluded, roughly 30%. What does that mean? Save, they can't make use products, something difficult for them to get out of. On the other hand, if they are within the financial spectrum and they have financial products, it can help the economy grow. And where we see that that is the case, we see that segment, which consists of adult population, lots of women, lots of youth, lots of MSMEs, and MSMEs, as we all know, contribute arguably some of the largest in terms of recruitment, in terms of hiring staff than any other sector. So those are all sectors that, if properly energized, will contribute positively to the growth and development of an economy. So I think it's important for us to understand that, to understand it very well, because without that understanding, then what the contribution can be of this kind of sector could easily be lost. Now, again, I must admit that I have personally been in that sector before myself, so I have a pretty good idea of it. 20 years, I chaired the board of EFINA, which was a Bill and Melinda Gates and UK DFID project for several years. I chaired that, and that was at a time when one would never have expected that the sort of progress that has been made with financial inclusion and understanding and awareness would have taken place the way it has. So over these years, so much has happened. And one is indeed very proud to see how central bank in particular over the years has been able to act as a catalyst for this kind of change. What I see going forward, a number of things, not least of which is public and private partnerships. Public and private partnerships to ensure that the two collaborate with each other and reach out to those who are financially excluded and bring them in. Oftentimes, there's a tendency for governments to work on their own. but it shouldn't be. Governments as the enabler and let the private sector come in and take their own rightful place and invest. That's why I gave you some of the background of what I have seen. Over the years, the government has the capacity to come in, make things happen, as we in Central Bank are trying to do. We had this conference, we have convening power, we bring in all the different stakeholders and enable them to work together and grow a bigger pie and ensure that their products get to those who really need them. Of course, there's need to strengthen institutional capacity, and I think we are quite away from that. And that is something that I believe that with greater collaboration, not just locally, but also internationally, we will begin to see that happening. Then, of course, women. There is, unfortunately, women are disproportionately excluded from financial inclusion, disproportionately. And that is something that has to be focused on. One major initiative that came out of that particular event was that between the Central Bank, Development Bank of Nigeria, and the bank industry, we signed a code for women entrepreneur financing. I think that is a major step going forward to ensure that the focus is there on bringing women in into that net. Then, of course, we should, one of the things that came out was the whole issue of mobile technology and leveraging the mobile networks to ensure that those who are excluded can come into the system and begin to enjoy the products that are there. And back to the issue of women, I must say something here. You know, with women, the evidence indicates that most women who make money, they end up, especially those people in the bottom part of the pyramid, they end up reinvesting their families. And so that is a reason why there's an even greater impetus to ensure that we can bring women in and, you know, reduce the extent of exclusion, the disproportionate extent of exclusion that women have in our society.
Thank you very much. I have a question from Yume Kege, this day newspaper. Permit me, to ask a question on behalf. She said, without meaning to preempt your remarks at this week's annual Bankers Dinner in Lagos, where you'll be giving your outlook for the Nigerian economy in 2025, what should Nigerians expect as we approach the end of the year and the beginning of another? Thank you.
Thank you. Well, let me first say that this is a very important week for the central bank in terms of communication. It's a very important time for the central bank in terms of communication. Of course, starting with today, do we have this session? Okay, one could easily have the MPC meeting and happily go away. But we've made it a point of duty to address the press and use this as an opportunity through the press to get out to every Nigerian to explain the things we're doing and to be as open and transparent as possible. Why is this important? Because at the end of the day, we need to build trust. We need to build trust not only in Nigerians, but also with people internationally, because as you all know, central bank is not just about Nigerians. The international community international banks, other central banks outside, they take a keen interest in dealing with us. And if they don't know what you are doing, and if they believe that you're telling them the right thing, then you can rest assured that you will only make marginal progress. For us, our key currency is trust. Our key currency is trust. And the issue of having this kind of engagement and having subsequent engagements this week, including between now and the bankers committee, the Chartered Institute of Bankers annual meeting on Friday. We have one or two others at which, certain updates will be given, and where relevant policy statements will also be announced, or at least be given forward guidance on. It is important that we see ourselves as responsible to others. And to answer your question, I believe that we will be going into the important annual bankers meeting with the mindset that a year ago, we had the privilege of addressing bankers and Nigerians on where we saw things going in the year coming. Of doing so. And when we go back this Friday, our intention is to give account. What did we say we would do, and what did we do? Secondly, is also to give guidance as to what people can expect the next year, knowing fully well that the year after that, we're coming back to account of what we said we would do and how well we did. Very broadly, I think in terms of specifics, I can assure you that between now and at the end of that Friday, we will stretch this as far as we believe is necessary, and we will, open up to all the things that we have done and where we stand on each and every one of those issues that we have committed to delivering on, and of course, giving very strong guidance of the road ahead. Thank you. One other issue, please, just, I don't know. Okay. One other issue just for your diaries, please. The next MPC meeting is January 27th to 28th. And at that forum, like I said, I'm hoping that this process of continuous dialogue and trust building will continue. Thank you all for listening.
Thank you, sir.
Merry Christmas.
Well, it's not Christmas yet.
Completion of this press briefing and the last one for the year 2024.
Yes.
Thank you all for coming, and see you in January 2025.
No. Yes, sir. Thank you.